Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. I'm on a mission to help entrepreneurs advance society, and this podcast is definitively part of that effort. All right, today we're jumping into some current events. My partner, Mike Rogers, and I are going to get into it, but we're going to tie those events back to how they impact the innovation economy. So hopefully you got some news, but also make sense of it. Enjoy. All right, man, let's jump in. So we've got, we're going to do a current event session.
Cool.
But little twist today that we're going to pick some topics that can tie back to innovation, startup economy, things that kind of live in our world.
Great.
Right.
Sounds good.
So you got a list. You want to pick your first title and hit it?
Yeah, I think big news this week is we had two really successful IPOs, Reddit and Estera. Reddit's still trading up, Estera's still trading up. So they seem to be really successful launches. Demand seems to be quite high for tech companies. I think the AI side of things is unlocking a lot of investor interest in participating in these deals. And I think there's just a lot of pent up demand for a new issue on the sidelines. So net, really strong for the innovation economy, really strong for startups, really strong for the IPO market. I think good for everyone generally, sort of unlock this pent up capital, people looking for new issue and access to these tech companies in the public markets, and setting valuations. And, you know, we had a couple IPOs, Instacart being the big name a few months ago now. I think people thought that was going to unlock things, and then it was sort of a slow start after that. These two have come in. We have the Fed saying they're going to cut rates later this year. Unemployment still holding strong. Soft landing seems like the best outcome here. I think this whole picture is really positive for our industry.
Yeah, this is big. This is, we're looking for a bellwether in the venture world, right?
Yeah.
Everyone's looking for some signal. So now other entrepreneurs and bankers will say, hey, you know, these IPOs crushed it. So maybe we should go list now and get some liquidity. It puts some fuel back in the tank at the top of the market and it flows through.
100%. I think a lot of people after these IPOs are starting to call their bankers up saying, hey, this looked good. What do you think we could trade for? How much could we raise, et cetera, et cetera. I mean, Reddit's closing in on a $10 billion valuation right now.
That's awesome.
Like that's a bellwether deal. That's no joke.
And this also opens up the market on the M&A side. Although that's not totally intuitive from the outside. But what happens is a lot of the public companies look and they say, okay, we can tap capital now.
Totally.
We can sell shares, raise cash, and go on a buying spree. And so if this pattern holds, now it's just a couple data points at this point, but if it holds, this could be the next phase of like second shift, second gear of like soft landing.
Totally. I mean, the other piece too is it's not just they can buy companies, but now they know where these things should price.
Right.
So before there was a lot of uncertainty around sort of valuations and general pricing in the market. Now it's like, hey, we could go buy this company at maybe some sort of private valuation before it goes public because we're scared that once it goes public, it might be out of our reach.
Totally.
So that liquidity premium that you're seeing in Reddit right now could transfer over to other businesses that might be in the acquisition strike zone for some larger companies. And I think it should hopefully just sort of grease the wheels on this sector going forward.
The one catch is our partner Chris was talking a couple of weeks back on the pod about how we're doing a soft landing into a minefield. And the mines are commercial real estate.
Yeah.
Because we've got a lot going. Everything across the economy looks pretty good, but we all know there's a whole reset around that. Now, at the same time, you've got so many pools of capital that have been waiting for to hit on a buying spree once commercial real estate really goes bankrupt. So maybe there's a soft landing baked in because it's the buyers are so well capitalized and so prepared for it. It's not a shock. I don't know. But
yeah, it's an interesting concept. You know, we haven't talked too much about it, but I wonder if they're sort of segmented markets. Like, I think, listen, I'm not an expert on the commercial real estate side. I know enough to be dangerous, but not enough to be an expert. I think my gut is that would stay fairly trapped in the commercial real estate and banking world, where sort of that most of that exposure lies. Now, of course, pension funds own commercial real estate assets. Everyone owns this down the line, but our bubble is still relatively small compared to the broader CRE, commercial real estate market. And my gut is that for the existing cohorts of companies that are looking to go public and raise venture kind of dollars, I don't think that will impact it too much, is my guess. But you know, I might eat those words later.
A contrarian's view here is in an election year, if there's a cataclysmic economic
they're bailing them out.
bailouts, interest rate moves, who knows? Like there's a lot of levers that get pulled that can have other impacts.
Yeah, rates are coming down. Banks are extending and pretending on this debt. I think that'll continue to happen. I think too, like the precedent is very clear now for the US government that anything that is systematic, they will step in on. They've done this now 3 or 4 times in the last 10 years. And while I won't opine if I think it's a good precedent or a bad precedent, it is the precedent. And I would be shocked if this commercial real estate issue did get to a tipping point where, candidly, our major financial institutions were impaired, that the government didn't step in. Election year or no election year. It's too systematic, and they've set the precedent there.
All right. Part 2. What's our next topic?
I don't know. What do you want to talk about?
Can't remember. We planned ahead of time. Can't remember what it was.
Yeah, the next one that's worth talking about is this big settlement in the real estate world, in the residential real estate world, which just happened this week, impacting stocks like Compass, which, to be full disclosure, we are shareholders of in our fund. But generally speaking, the realtor commissions are going to change. Anyone who's bought or sold a house has dealt with this pain point before, paying 5-6% in a lot of cases to transact on a home is really good for the giant real estate brokerage industry, but really terrible for consumers. It's my view that this shift will move capital from the pockets of big real estate brokerage firms and realtors to homeowners who, candidly, I think deserve it a little bit more than they do. Feelings aside, I think the real estate market's been a bit locked up right now for a bunch of reasons, interest rates being one of them. But also this transaction cost kind of makes it hard to buy and sell, right? If you've only gained 3 or 4 or 5% on your property in the last few years, and you might want to move, you're like, yeah, but I got to pay 6% to move, plus legal fees, plus transaction, whatever.
Plus fees on the new mortgage.
Plus fees. Yeah, it's crazy.
Layers and layers of fees.
It stacks so high that trading and moving becomes sort of not worth it economically anymore. And when you create that environment, it becomes really hard to do it.
Although most people don't understand that. I think they don't see the full stack of fees they get hit with.
No one goes into it with the fee expectation that ends up coming out.
They don't do the math. And so they're like, oh, I made money, I'm up, but they might not be up.
Well, when a realtor gets 6% on the value of the home, which is crazy if you ask me, then you have to have the whole value of the home go up by more than 6% in your time living there just to break even on their commission, not including the lawyer fees, not including search, not including renovations, not including taxes. It just, to me, seems like it's always been an inequitable portion of the pie and has impaired our real estate market.
This is a really interesting moment in my mind. Since I've been in this venture business, going on 20 years now, this has been the one broker arena where tech has not been able to break through, penetrate, and disrupt.
Totally.
And this may be the gloves off moment. I actually built a hypothesis around why this one wouldn't break, why we couldn't beat it. And the theory that I came up with was like a 2x2 matrix where you had the risk or the value of the asset you're buying and the level of opacity of information. When you're buying a home, for a lot of people, it's the vast majority of their net worth. So risk is high. You got to get it right. And you're going into a situation where you have a huge information asymmetry. I mean, knowing how to deal with plumbing and chimneys, there's so many different areas of expertise that someone who doesn't work in real estate at all has no shot of ramping up on during a transaction. So I had decided, okay, that must be the reason why this is the one category that we can't kind of break into. I mean, there's been countless venture-backed companies, because every VC is looking at this and saying, hey, it has all the parameters of something that should be disrupted, but it's never worked. It's hundreds of millions of dollars have gone in. It's never, ever worked.
And the biggest one is Compass, right? I mean, they
early Redfin days before that. I mean, there's every 5 or 10 years, it's been a repeat cycle of tech company comes out with a huge amount of funding and just runs into this market and hits a wall.
Even the Zillows of the world, right? I mean, when they first came out, I think I wasn't there, but I believe the premise was we're going to take buying offline or online, offline buying online and help you transact without paying a giant broker fee. My assumption is that they sort of ran into this wall that everyone else has run into where the brokers control the transaction and the rate and have caved to becoming a listing service instead. Now, though, if you're like, hey, I don't need a buyer agent anymore and I can negotiate the seller agent down to 2% or something like that, you'll rely on these platforms more and more for finding your property. Maybe they can take a piece of the transaction or they can charge you a service fee.
Right.
Maybe Zillow goes and says, hey, for $5,000, we'll put a trusted person on the phone who can give you all the market information, break down exactly what the valuations are, price per square foot based upon different conditions, give you everything that this human person was giving you for 3% of the value of your home for 25 bips.
Right.
And to me, that's what's really interesting here. And to your point, where I think now you'll see entrepreneurs be able to build companies in the space with success.
Right. So the question now is, can the homeowner get enough trust in a tech platform? Historically, the answer has been tech has been able to earn that trust by breaking through.
Totally.
I think the best data point is what you were looking up earlier. The percentages of seller reps getting paid in other countries where it's not essential a collusion structure, which is what we've had until this lawsuit.
Totally. Yeah, I think I'll find it again. Buyer agents in the US are on about 87% of transactions. The reason why that's been historically is because if you don't, the seller has paid the buyer's agent.
Right.
So, by the way, great tactic on their side. The person who's about to pocket hundreds of thousands or millions of dollars, yeah, okay, an extra thousands of dollars, whatever, we'll write it off. There's a wealth effect for sure. And the buyer says, great, I'll hire someone because we don't pay them. And in the US, even if you didn't have a buyer's agent, you still ended up with a 5 or 6% transaction fee. So you might as well hire one. In other countries, Australia, less than 5%, United Kingdom, less than 5%, Netherlands, 20%. Average across the globe of transactions in real estate where there's a buyer agent present is sub 33%. In the US, it's 88.
Right. So now when you have to decide, am I going to pay someone to rep me or not everyone's going to opt in to do it. Whereas right now, it didn't matter because the person selling it covered the ticket. They covered the cost of your
if we go
person.
to even the global average, we'll go down from 88 to 33%.
Right. And there, it's a 2/3 slash in the market, more or less.
Right. In the buyer side of the market, for sure.
Wow.
So that might, so 100 billion of real estate commissions to agents a year. So if you take off 60% of a third of it, you could swipe off like 30% or so of that. So maybe 30 billion of commissions go away.
If tech breaks into this market, it's going to shrink the hell out of it.
Oh, it's already there. And I think that's what's really interesting, right? It's like what happens with all these existing point solutions now in this market because you don't have to pay this person 3% anymore.
Right.
There's $30 billion of spend that just appeared for people to go and try to grab a portion of it.
Wild.
That's a big market.
All right. What's number 3?
Number 3 on our list today is, I don't remember. Boeing. Yeah. This one is probably the least relevant to like our portfolio or tech specifically, but I think a relevant conversation to talk about just because of, where they are in the market and how the lessons we can learn in our own portfolio companies, et cetera. But anyone who's been alive has been following the news at Boeing lately. This once great American company has fallen by the wayside in terms of quality, and they're not building like washing machines, guys. They're building airplanes, something that really should be high quality. And they over-optimized for really, I just call it corporate greed, right? Stock buybacks, CEO bonuses, operating margins increasing at the stake of quality, and it's coming to a head, right? Interesting story in sort of like poor long-term corporate management, in my opinion. But what do you think?
Yeah, there's a agency issue with a lot of public company management teams, right? They just are incentivized to manage for the quarter earnings per share.
Yeah.
They might be incentivized to work towards a couple of annual bonuses before they churn out of their job. But some of these decisions in huge companies, they have long-term effects. And it just doesn't square up. But this is a particularly painful one for me. I'm a little bit of a history nerd, right? Boeing was one of the giants of the 20s and 30s, like when they came out. And a fun trivia fact for folks listening to this. The founder of another great American company is also Boeing. Do you know which one it is?
No.
So it's actually United, which was the first commercial airline. They were both under Boeing. And then in the antitrust period, which is anti-monopoly, put in common parlance, like today's language, the government forced Boeing to spin out United. So they used to make the planes and then they invented commercial aviation.
Right.
So William Boeing's kind of the man right at the time.
Sounds like it.
But yeah, this is tough to watch. This is a great legacy being destroyed.
Yeah. And, while usually I'm a pretty government hands-off guy, I do think that it's quite a testament to a monopolistic structure that Boeing still employs in the manufacturing of airplanes in this country. I mean, there's 2 airplane manufacturers globally, right? You have
there
Boeing
are some
in the US.
natural monopolies. Like there's some industries that are just too expensive. Semiconductors, airplanes, there's just a few things that you can't have 50 of them.
No, but you could have 3. There's demand now for 3, 5. You know, again, I don't think it's going to look like cars, right? There's going to be 6 major car companies, and then there's a long line of private aviation and smaller players in the space. But for the majors, I think it probably should look something like Volkswagen, Ford, GM, and one more that make the majority of the world's cars and/or airplanes. Unfortunately, for passenger aircraft, it's Airbus in Europe and Boeing here in the US. And you notice this in Boeing, it was almost shocking over the years how little they seem to care about these issues coming up. And the short answer was because there was nowhere else to buy planes.
Right.
If you were an airline trying to grow your routes and get new, improved, better aircraft, you had to go to Airbus or you had to go to Boeing. And if Airbus's line was 3 years and Boeing line was 2 years, you're going to go to Boeing.
I also think about the innovation in the space, not getting into the technical details. I'm not a aerodynamic engineer or whatever, but I've been in planes for a long time. They haven't changed much.
They got TVs.
Right. I mean, it's JV innovation.
Yeah.
And this whole situation, top to bottom, smells like a wonderful opportunity for entrepreneurs to stand up, raise a huge boatload of capital, and start building modernized technology, electrifying planes, maybe removing pilots. There's a lot of frontier opportunity here that has just not been done. So I'm hoping this window in time inspires some of the folks in maybe the space industry to step to the side and come over and fix aviation.
Right. Or use commercial aviation as a way to grow into the space world.
It's a window. It's a window. And I bet you this will inspire some VCs to write some checks too.
I hope so. I mean, unfortunately, it's such a long lead time on these things.
But worth it.
Yeah, it's worth it. I agree. But interesting you say that actually, because where most of it has gone is into space, right? Blue Origin with Jeff Bezos, obviously SpaceX with Elon Musk. Richard Branson's one too with Virgin Galactic. Yeah. So it's the people who could have been doing this said, I'd rather go to the moon.
I just feel like the door wasn't open too, right? It felt like a monopolistic situation. Whereas commercial space had the government's blessing. NASA's saying, hey, we're going to start writing contracts. They've been a good partner.
Yeah.
We just had Dylan Taylor from Voyager Space on the pod a couple of weeks back. He operates a private company and they're launching the next commercial space station.
Right.
It's privately owned.
I actually listened to this one.
Yeah. Good. Good. You learned something. Yeah. NASA's partnering, making it happen. That paradigm, I don't think has been open from a government standpoint to aviation entrepreneurs the way I'm hoping it is right now.
Right. This is so, okay. Big question for you. Why isn't this the time, to your point, where the federal government says, you know what? We want another player in aviation. We're going to write a $20 billion check. Well, the US government and the people of the US will own some equity in this thing or whatever it is. And we help spin up the next 3 next gen aviation companies to compete with Boeing and Airbus and sort of launch this the way that it should be launched.
I think the way they do that, since I think they're trying to get out of the business of being equity investors, there's all these conflicts.
Yeah, it's fair.
There's going to be complaints later by politicians and lawsuits and nonsense, is they create RFPs. I think that's how they fund it. They say, we're willing to fund a 10-year from now purchase from 3 different companies. That's how they do it. And they don't take any equity, but they're essentially seeding the market. But this is a great moment. I would hope that there is some political will that comes out of this.
Or the big airlines do that.
Or the big airlines.
Because if you're
or
Delta,
one of the big commercial giants right now goes out and buys up Boeing and tries to shake it up, right? It's not going to happen. I think Elon's spread thin enough as it is, but
I know you want Elon Musk to buy them, but what? Boeing as of today is still a $115 billion company. So
right, but that's
tough buy.
Well, it just depends on what you think it could be.
Yeah, I mean, listen, even in a year, the stock is still down only 10%. So,
which is crazy.
Because the point, you still have to buy
they're
planes
falling apart in the sky.
Literally can only buy planes from them.
Right. Insane.
Yeah.
Insane.
Cool, man.
Good sesh.
Later.